You spot the setup. Price cleanly pierces resistance. You execute the buy order, and 10 minutes later, the market violently collapses in the opposite direction. Traders call this the whipsaw. It is a rapid, sudden reversal that eats away intermediate trading capital by 1,000 tiny cuts. The problem here is a blind spot. Most traders focus entirely on where the price is pointing, but they completely ignore whether the market has enough underlying momentum to actually get there. That is the exact variable the average directional index, or ADX, is built to measure. It doesn't try to predict if the market will go up or down. Instead, it acts as an objective lie detector for market strength, telling you if a move has the institutional volume to sustain itself. By objectively grading momentum, you can systematically filter out the deceptive noise of raw price action before you ever risk a single dollar of capital. There is a persistent myth that a rising ADX line means the market is in a bullish, upward trend, but the indicator is actually entirely non-directional. Think of it like the speedometer in your car. It measures pure kinetic energy and how fast you are traveling. It does not care if you are driving north or south. Look at these charts. Left, the asset crashes. Right, it skyrockets. Beneath both, the ADX line surges. It responds to intensity, not direction. Now watch when the market goes quiet. Price moves sideways. Below, the ADX flatlines under 20. This is the no trade zone. When the indicator sits here, the market wanders aimlessly. Trend-following strategies will likely fail. But to find a viable setup, we wait for this moment. The ADX line arcs upward, piercing the 25 threshold, signaling institutional volume and a trend-on state. Simply refusing to take a position while the ADX sits below 20 is the single most effective way to protect your account from sideways chop. If the ADX is the engine generating velocity, the Directional Movement Index, or DMI, is the steering wheel that provides the vector. The DMI uses two lines to measure buying and selling pressure, the plus DI and the minus DI. A common strategy is to buy when the plus line crosses over the minus line, but in a low momentum environment, that crossover is a trap. To validate that signal, we apply the rising slope rule. A DMI crossover is mathematically invalid unless the ADX line is simultaneously pointing upward. Here, price breaches resistance and plus DI crosses minus DI, but the ADX remains flat at 15. Lacking strength, price hooks downward, a fakeout. The chart resets. Price breaks resistance again, but now ADX angles sharply past 28. This validates institutional flow, allowing continued upward ascent. Layering the ADX slope underneath your breakout levels removes the guesswork. It turns an emotional decision into a mechanical system requiring mathematical proof. Of course, even the strongest, heavily backed trends will eventually burn through their fuel reserves. This chart reveals a leading indicator of exhaustion. The ADX line here has reached an extreme high above 45. Suddenly, it forms a sharp downward hook, even while the price line above it continues to inch upward. When you see that downward hook from an extreme peak, it means the sheer force behind the trend is dying. This is your immediate signal to tighten your stop loss or take partial profits. To maximize this tool, we have to zoom out and apply multi-time frame analysis to locate what we call the master trend. This creates our ultimate filtration rule. You only execute an intraday trade on a shorter time frame if the dominant daily chart shows an ADX reading that is above 25 and actively rising. By consistently respecting these filters, you stop reacting to random price movements and start operating as a highly disciplined market gatekeeper. Log in to the FXNX charting suite right now and pull up a currency pair that is currently trapped in the ADX no trade zone. Watch the erratic price action and see exactly what you are successfully avoiding. Then download the FXNX ADX Trend Trading Cheat Sheet. Head to the demo platform and challenge yourself to backtest the 25 threshold rule. Measure the noise you filter out and see the difference.